Market conditions remaining mildly bullish in the bull market, and that current rank is sitting at 22.51, continuing to climb. Now we are not seeing a lot of broad-based participation. We're seeing momentum just approaching that bullish trend, hasn't quite reached it yet, and breadth is also stuck right here in the middle. Sentiment, the upper end of that range, still a lot of complacency. We haven't really seen much fear or any of these selling days that we've seen. We're continuing to see buying back into those. We do have a negative buy-sell ratio, or a buy-sell ratio less than 1, I should say 0.52, meaning that bears are in charge, the red line above the green line right here. And part of the reason why we're seeing some slowness, or at least some tug of war in this price activity right here, is we have a negative breadth right here. We have bearish breadth, I should say, and that is affecting some of these rallies right here. So we're getting just a more concentrated rally in larger groups of stocks, similar to this entire year, honestly. So our support area now on sentiment, we're above the 50% zone, a little bit of a move back up again, sitting right at that support area as well. And we'll see if we get any follow through here today. If we take a look at the major indices, S&P 500, finding support right there at that 520 range. Let me remove that candlestick so you can see these are actually bullish candlesticks right here, finding some support. So we're getting bottoming tail bars, we're getting up days, and we're getting two or three of those buying into those dips. Those tail bars represent buying where they drop down, and then you get buyers that come back in, and it creates that tail on that candlestick right there, that wick as it's also called. So some support happening right here, and that's the area that we would anticipate the support to happen. Let's see if we get some follow through, some confirmation. If we could break out of that, 533 range and have a decent run, we could see some acceleration to the upside here in current market conditions. If we look at bonds continuing to have a nice run here. The long-term bond TLT, another big up day yesterday, 1%. So we've got 2 solid up days now, and really 3 or 4 solid up days from these lows down here on bonds. And that is, that's bullish for the economy, bullish for stocks. Stock market's been wanting to see this battle between interest rates and inflation, and a rallying bond market means that interest rates are coming down. So we definitely want to see that. Also want to see, if we jump over to sectors right here, continue to see commodities. Actually, let's jump to commodities and we'll go to sectors. Commodities across the board are all pulling back. We've seen gold pulling back. Support right here at the 236 though, and it really is wanting to, feels like, continue that overall uptrend, but there's some weakening happening here. We could slide all the way back down to that corrective zone, that 382 on GLD. We're also seeing USO slide significantly. USO is the ETF for oil, and slid down through that $75 support area really aggressively a couple days ago. Now a little indecision bar right here. We'll see if we get any kind of a support level. We're extreme to the downside on momentum, to the downside, that negative 241. When you get to negative 250 or positive 250, those trends start to slow. They don't necessarily end, but they do start to get some indecision bars, or maybe a little counter trend bar back up again. Oil, that's good to continue to see oil sliding. Let's take a quick look at sectors, see if we've seen any improvement there. Really not a whole lot of improvement. I've got a handful, majority in holds, handful in sells, a couple into the buy range, so not a big change there for the last few days. If we jump over to the muscle stocks list, seeing some nice looking setups here today. 3 or 4 biotech names here in that medical service space. WGS been a big high flyer, finding nice support here off that 236 area, and could see some follow through on a breakout if it can close up above that most recent high. Also seeing TWST. Also saw some insurance names that were in there. PLMR, which is an interesting price pattern. Also see momentum zone support. When I say that, I'm just talking about this upper range. You can see the support right at that 236 area. That's the Fibonacci snap tool, snapping from that high point and that low point and finding some support here. Those are continuation type trades. They typically don't retrace much deeper than that. So we want to watch for those support areas in that upper momentum zone. And this the new buy list is a great place to be able to focus on, therefore, trades for the day. That'll do it for today's update. Everyone have a fantastic day today.